In this video, we're diving into a fascinating and timely subject, the possibility of the United States adopting a digital currency. Imagine a world where physical cash is replaced by digital tokens, securely stored in your digital wallet. But what would this mean for our economy, privacy, and financial systems? Buckle up, because we're about to explore the future of money in America. This video is made possible with the amazing live streaming, audio, and video recording, plus webinar platform solution from StreamYard. Here's why you should consider using StreamYard as a content creator or webinar host. StreamYard is the ultimate live streaming platform. Are you a content creator looking to take your live streams to the next level? Or are you looking to become a content creator? Look no further than StreamYard. Whether you're a podcaster, gamer, educator, business owner, or professional, StreamYard offers powerful features to enhance your live broadcasts. So why use StreamYard? First, easy setup and professional quality. StreamYard is user-friendly and requires no technical expertise. Simply sign up using my special link that you'll find in this event's description, and you'll be up and running in minutes. Enjoy professional quality streams with customizable overlays, logos, and backgrounds. Secondly, and great for branding across many platforms, is multi-platform broadcasting. Stream to multiple platforms simultaneously, including Facebook, YouTube, LinkedIn, X, and more. You can reach a wider audience by broadcasting across various channels. How about conducting guest interviews with ease? Invite guests to join your stream remotely. StreamYard's virtual studio allows seamless collaboration. Conduct interviews, panel discussions, or Q&A sessions effortlessly. Engage with your audience by using StreamYard's live chat feature to interact with viewers in real time. Display comments on screen and build a community around your content. When it comes to branding and customization, you can brand your streams with custom overlays, watermarks, and lower thirds. Also, showcase your logo and maintain a consistent visual identity. And lastly, recording and repurposing. Record your live streams for later use. Repurpose them as podcast episodes, YouTube videos, or social media content. StreamYard's recording feature ensures you never miss a moment. Okay, so after this live event ends, get started with StreamYard for free. Sign up using my special link added to this event's description and also posted in the comments. By using this link, you'll receive exclusive benefits such as free basic plans so you can start live streaming without any cost. Think of doing a trial run. And if live streaming and recording audio and video via StreamYard is what you want to do, then step up your game and get a $10 credit when you upgrade to a StreamYard paid plan and enjoy additional value-added advanced features. So don't miss out on this opportunity. Join the StreamYard community that I've been a member of since 2020 and create captivating live and recorded content and more. So what are you waiting for? Sign up with StreamYard today. Here's what I'll be covering in this video. Introduction to the U.S. Central Bank Digital Currency, the U.S. CBDC. The benefits of using a U.S. CBDC, its challenges and considerations, also public perception and adoption of the CBDC, its global comparisons, and the road ahead for a U.S. CBDC. A United States Central Bank digital currency would be a tokenized and blockchain-based version of the current U.S. dollar, acting as a legal tender and regulated by the federal government. Imagine the familiar dollar bill digitally transformed into a secure, traceable unit of value. Here's what stands out. Digital sovereignty. Unlike cryptocurrencies that operate independently, a United States Central Bank digital currency, or US CBDC as it's known in the digital currency world, would be fully backed and issued by the Central Bank of the United States, which is the Federal Reserve. It's Uncle Sam's digital creation, ensuring stability and trust. This digital currency would supplement existing payment methods. The currently proposed CBDC wouldn't replace physical cash or existing digital payment systems, it would complement them. Picture it as an additional lane on the financial highway, speeding up transactions and enhancing efficiency. Identity verification and privacy. Launching a CBDC involves robust identity verification processes. Privacy protection is paramount, striking a balance between transparency and individual privacy rights. Built on blockchain infrastructure, the CBDC's foundation would be blockchain technology, a distributed ledger ensuring transparency, security, and tamper resistance. Every digital dollar would leave a trace, making it harder to hide in offshore accounts. Minimizing intermediaries and greater accessibility. CBDCs could reduce reliance on intermediaries like banks for transactions. Plus, CBDCs provide financial access to those currently outside of traditional banking systems. As the U.S. central bank digital currency could potentially offer a range of benefits, here are the top 5 benefits stressed by digital currency experts. Number 1, efficient and low-cost transactions. A U.S. CBDC could facilitate efficient and lower cost for transactions. Number 2, greater access to the financial system. It could foster greater access to financial systems, especially for lower-income households. Number 3, supporting the U.S. in the international financial system. It could support the continued centrality of the United States within the international financial system. Number 4, safe payment options. A CBDC would be a liability of the Federal Reserve, making it the safest digital asset available to the general public, with no associated credit or liquidity risk. And number 5, instant digital money transfers and economic stimulus payments. Users could enjoy minimal or no fees for instant digital money transfers, and the government could instantly send and track direct economic stimulus payments to the accounts of all U.S. citizens. However, it's important to note that the Federal Reserve has made no decision on whether to pursue or implement a U.S. CBDC. They are currently exploring the potential benefits and risk of CBDCs from a variety of angles. The Federal Reserve is committed to ensuring the continued safety and availability of cash and is considering a CBDC as a means to expand safe payment options, not to purposely reduce or replace them. Implementing a U.S. central bank digital currency comes with several challenges and considerations. First is security. Like cash and conventional electronic payment systems, security considerations for a CBDC include the prevention of counterfeiting, fraud, and double spending. Other security considerations include anti-money laundering and countering the financing of terrorism, consumer protection, and financial stability. Regardless of the technology used, security must remain an important consideration for a CBDC. Second is technology risk. A potential technology solution that is often discussed for CBDC is a distributed ledger technology, or DLT. While DLT may offer benefits, its use is not without security risk. Let me drill down into risk related to distributed ledger technology. Security experts point to 3 main risk types. The first is scalability issues. DLT struggles on scalability when the number of participants and transactions increase. Now, with a US CBDC, there's going to eventually be a large number of citizens using digital currency and conducting high-volume business and personal digital payment transactions. The second issue is related to counterfeiting, fraud, and double spending. Additionally, DLT has unresolved threats from cyber attacks. And last is a lack of standards for the deployment of DLT solutions, even related to terminology, programming practices, platforms, and incompatibility with legacy systems. And now back to our challenges. Next is financial system stability. A U.S. CBDC could affect the financial structure of the U.S. and alter the duties and responsibilities of the private sector and the central bank. The safety and stability of the financial system could be compromised during the conversion process from another form of money to a CBDC. Fourth is the policy and implementation issues. The Federal Reserve must resolve several key policy and implementation issues, such as establishing comparative advantage over private issuers and ensuring safety and soundness. And number 5, legal and regulatory approvals. While the Federal Reserve plays an important role in these ongoing discussions and technical research, the Fed would not implement a U.S. CBDC without the approval of Congress. Now let me add 2 more additional challenges. The first is design variability. A CBDC built on distributed ledger technology offers a wide range of design and potential use options, as well as potential risk. This variability complicates any discussion of a CBDC simply because we may not be talking about the same thing. And the second add I'll have is problem identification. There are 2 threshold questions which policymakers need to ask before any decision to move forward with a CBDC. The first, what problem is the policymaker trying to solve, and is a CBDC a potential solution? Second, what features and considerations, including unintended consequences, may a policymaker want to consider in deciding to design and adopt a CBDC? Public perceptions of a U.S. central bank digital currency are varied and complex. Let's cover what has been reported. First is general receptiveness. A slight majority of consumers were generally receptive to the idea of a U.S. CBDC. Number 2, trust in central banks. Trust in central banks is crucial for successful CBDC implementation. Number 3, perceived benefits. The perceived benefits of the U.S. CBDC include faster transaction and enhanced security. Number 4, consumer expectations. Widespread consumer adoption will require that the product does not require fees to access or use, be accepted widely in the marketplace, be uncomplicated to adopt, and provide high levels of security and privacy for consumers. And number 5, concerns. There are concerns about cybersecurity risk and privacy issues. It's important to note that these perceptions can change over time and are influenced by a variety of factors, including ongoing discussions about the potential benefits and risk of CBDCs. The Federal Reserve has sought public feedback on a wide range of topics related to CBDC and is committed to hearing a wide range of voices on these topics. Okay, now let's cover public adoption considerations for the U.S. central bank digital currency, which are multifaceted and include several key factors such as consumer preference. Understanding consumer preferences for the U.S. CBDC is crucial. As I mentioned earlier, a slight majority of consumers were generally receptive to the idea of a CBDC, and widespread consumer adoption will require that the product does not require fees to access for use and be accepted widely in the marketplace, be uncomplicated to adopt, and provide higher levels of security and privacy for consumers. Safety and accessibilities. The Fed must be satisfied that it is a safe digital asset that's accessible to the public before it launches a U.S. CBDC. It must determine that it's without credit and liquidity risk, and that it's privacy protected, intermediated, transferable, and identity verified. And for technical feasibility, a recent Federal Reserve Bank of Boston and Massachusetts Institute of Technology white paper shows that a CBDC can be designed to settle an extremely high volume of transactions in a very short amount of time, providing further evidence that a CBDC at scale is technically feasible. Regulatory approval. The Federal Reserve will not issue a CBDC unless the potential benefits outweigh the risk. A CBDC is a better alternative to other payment technologies, and it has clear support from the White House and Congress, ideally in the form of an authorizing law. Design principles. The paper lays out key principles and guidance that a potential U.S. CBDC should follow to best serve the U.S. needs, ensuring consumer privacy protection, operate under an intermediate model. For example, the private sector would offer digital wallets to facilitate CBDC holdings and payments, be widely transferable between economic agents and other intermediaries, allowing free move throughout the economy, have the ability to identify identities of agents accessing the CBDC to combat money laundering and other related crimes, and provides significant benefits to economic agents and the economy that exceeds costs and risk. Central bank digital currencies are being explored globally, with different countries at various stages of development. Here are some global comparisons. China. The digital currency is known as eCNY, which continues to progress with more than 100 million individual users and billions of won in transactions. It's one of the most advanced CBDC projects globally. European Central Bank, or the ECB. The ECB announced a preparation phase to lay the foundations for a digital euro. The digital euro is intended to be a digital form of cash that provides offline services, high levels of privacy, and instant settlements in central bank money. Sweden. Sweden's Riksbank has developed a proof of concept and is exploring the technology and policy implications of CBDC. Other countries. Nearly 100 countries are exploring CBDCs at one level or another. New research shows that 130 countries are now exploring a CBDC representing 98% of global GDP. These global comparisons have highlighted the growing interest in CBDCs and the different approaches taken by various countries. The U.S. Federal Reserve is carefully studying these developments as it considers the potential implementation of a U.S. CBDC. So what's the road ahead for the U.S. central bank digital currency? What does it look like? Well, the road is a very complex and multifaceted highway. Here's the complexity of the U.S. CBDC implementation path forward. Policy debate. There's a policy debate concerning the need for a CBDC, its role and what shape it would take. Technical feasibility. The U.S. has been closely examining the implications of and options for issuing a CBDC. As I mentioned earlier, a recent Federal Reserve Bank of Boston and Massachusetts Institute of Technology white paper showed that a CBDC can be designed to settle an extremely high volume of transactions in a very short amount of time, providing further evidence that a CBDC at scale is technically feasible. Regulatory approval. The Federal Reserve will not issue a CBDC unless the potential benefits outweigh the risk. A CBDC is a better alternative to other payment technologies, and it has clear support, as I mentioned earlier, from the White House and Congress. Ideally, it would take the form of an authorizing law. And design principles. The key principles and guidance that a potential U.S. CBDC should follow to best serve U.S. needs include ensuring consumer privacy protection, operating under an immediate model where the private sector would offer digital wallets to facilitate CBDC holdings and payments, be widely transferable between economic agents and intermediaries, allowing free move throughout the economy, having the ability to identify agents accessing the CBDC to combat money laundering and other related crimes, and providing significant benefits to economic agents and the economy that exceed cost and risk. Timeline. It's suspected that there will be some years before the US CBDC is designed, approved, and used. Now, the best guess would be a 3 to 5 years, period. It's worth noting that the central bank has not yet committed to creating a CBDC in the first place, so the final form of a digital dollar system remains an open issue. These considerations are crucial for the success, implementation, and adoption of a US CBDC. To wrap up this video, the potential of a US central bank digital currency is vast, promising efficient transactions, greater financial inclusion, and a new platform for innovation. However, it's a journey filled with complex considerations, from ensuring security and privacy to navigating regulatory approvals and managing the transition from legacy systems. As we've seen, countries around the globe are exploring this digital frontier at their own pace. For the U.S., the road ahead is one of careful study, robust public discussion, and meticulous planning. As we continue to navigate this digital revolution, one thing is clear. The conversation around a US CBDC is just getting started, and its implications will be far-reaching. Stay tuned for more updates on this exciting development in the world of digital finance. Thank you for watching.